The Schwab US Dividend Equity ETF, known as SCHD, has not only been paying dividends but also increasing the dividend payments for over the last 10 years plus. Now, with an around 11.35% 10-year dividend growth rate, this ETF is one of the best-in-class dividend growth ETFs that long-term investors have been dumping money into for years now. But with the way that SCHD has been recently trading, even hitting a fresh new year-to-date low as of recently, the popular ETF has some investors worried about the ETF's long-term health and also questioning the safety of the dividend and what to expect long-term. Now, in this video, we are going to analyze SCHD deeply, and with using predictive data models, we are going to try and see what SCHD's dividend could look like over the next 10 years or so, and if or if not the king of all dividend ETFs is still worth investing into. We're going through all that and more right after you please take 3 seconds and like this video along with subscribing for more high quality content like this in the future. So first, a little bit of background on the SCHD ETF. The Schwab US Dividend Equity ETF, or for short SCHD, is an exchange-traded fund that offers investors exposure to a diversified portfolio of dividend-paying US companies. Now, the objective of SCHD is to track the performance of the Dow Jones US 100 index, and the index consists of 100 high-quality US companies that have a history of not only consistent dividend payments, but also the tendency to raise their dividends over the long term. Now, SCHD's portfolio is made up of a variety of different stocks from different industries and sectors. Now, the stocks are chosen based on factors such as dividend yield, dividend growth, and financial stability. But speaking about dividend growth, let's talk a little bit more about dividend growth and why this is such an important aspect when it comes to SCHD. So dividend growth investing in general involves buying stocks or ETFs that not only pay dividends, but have consistently increased their dividends over time. Many dividend growth investors look for companies or ETFs with a dividend growth rate, or for short DGRs, that exceed the rate of inflation and above, and on top of that, look like they have a sustainable path moving forward. Now, one approach to screening for dividend growth stocks or ETFs involves calculating a future yield on cost, or for short, a YOC. And this is based on the stocks or ETF's current yield and its past DGR or dividend growth rate, often on a 5 to 10 year scale. Now, a common criticism for those assuming and predicting the future dividend growth rate is, of course, the fact that what took place in history, such as dividends paid per year and other stock or ETF performance, does not mean that it's going to happen again in the same way in the future. Various things can take place moving forward. Things like changes in economic conditions, industry dynamics, or even company or ETF specific factors. Now, in SCHD's case, companies within the fund can definitely have dividend cuts or even suspensions in the future if conditions change. And these events would impact the ETF's ability to sustain or grow its dividend substantially. Overall, it's very challenging to accurately predict how these different factors will unfold over time. So that's why, in my opinion, when it comes to projecting dividend growth projections or projections in general, I tend to be a little bit more conservative and look at things in the worst case scenario. It's also important to note that when it comes to SCHD, the dividend is determined by the dividends paid by the underlying companies held in the ETF. Remember, SCHD is an ETF with a basket of dividend-paying stocks. Now, here's a simplified explanation of how this all works. The SCHD ETF holds a portfolio, a basket of different dividend-paying companies. These companies generate profits from their business operations. As part of their financial management, these companies may choose to distribute a portion of their profits back to the shareholders in the form of dividends. And typically, the companies that SCHD chooses has a likelihood of not only paying, but raising their dividends substantially over time. Now, this right here is a predictive model of the SCHD ETF over the next 10 years. But before we go into how SCHD could perform in the future, let's go through the past and see how it's done. So these dividend payouts are on a yearly basis. In 2011, SCHD paid around 12 cents USD for that year. 2012, SCHD paid 81 cents. 2013, it paid 90 cents. 2014, it paid $1.04. 2015, $1.14. 2016, $1.25. 2017, $1.34. 2018, $1.44. 2019, $1.72. 2020, $2.02. 2021, $2.25. 2022, last year, $2.56. And this year, now we are getting to the predictive models. If we were to input a predictive dividend growth rate of 10.03%, which could be used as a conservative model, considering over the last 3 years, SCHD has a 14.05% dividend growth rate. Over the last 5 years, SCHD has a 12.24% dividend growth rate. And over the last 10 years, SCHD has a dividend growth rate of 11.35%. So if we were to go very conservative, assuming an annual dividend growth rate of just 10.03%, which, side note, this means the dividend would double every 7.2 years, which is pretty good. So if we were to go ahead and apply that predictive model, in 2023, we would end up with a $2.81 per year per share dividend. 2024, we would end up with $3.10 per share per year dividend. 2025, $3.41. 2026, $3.75. In 2027, over $4 finally, $4.13. 2028, $4.54. 2029, $5 per share. By 2030, with this conservative model, we could see $5.50. By 2031, $6.05. 2032, $6.66. And by the year 2033, we could in fact possibly see $7.33 per share paid for each share of SCHD that you own. Now, this is obviously very substantial, and as the power of compounding works, the bigger the numbers get, the faster they grow, and the bigger that they get. It's also important to keep in mind, like we said earlier, just because SCHD has had 14.05% dividend growth rate on the 3-year time frame, a 12.24 on the 5-year, and an 11.35 on the 10-year, does not necessarily mean that this is what SCHD investors should expect to see over the next 10 years or so. And there's definitely a lot of criticism saying that SCHD has been on a tear over the last decade, and it's not sustainable that we can assume that large of dividend growth increases continuing on from here. But what I would implore any of us to do, if you are interested in investing into SCHD, and you want to try to predict what the long-term dividend growth rate will be, even if you're more conservative and place a 9%, an 8%, or a 7% dividend growth rate on the ETF, the outcome, in my opinion, is still very substantial for a high-quality, well-diversified fund that also definitely has the potential to grow in share price over the long term. But I want to hear what you guys think down below. What do you think the SCHD ETF dividend growth rate is going to look like over the next 3, 5, or 10 years? Do you think that it's reasonable to assume that we could see around a 10% dividend growth rate moving forward here? Or do you think the dividend growth rate will be much lower or much higher? Please let me know down below. If you enjoyed this video and you want to see more videos like this in the future, make sure to please drop a like in the video and subscribe for more content like this. Thanks for stopping by, and I'll see you in the next one.